Yo, what's going on, guys? Welcome to another video. Hope you guys have been learning, hope you guys have been trading. It's been a challenging time, but today's video, I don't want to waste so much time. We are going to dive right into the topic. Today I want to show you guys 5 things that you should consider before you enter a trade. Hope you guys get value from this video. Remember, as usual, if you find value at the end of this video, give a like, subscribe to the channel, and share your thoughts down below. So guys, without taking any longer, I'm going to be switching between the charts and talking to you guys on the screen, explaining to you some of the things, some of these concepts. But before we go into the video, I'd like you guys to suggest in the comment section down below what you guys want to learn, because I've been getting so many comments from you guys that you don't understand some of the strategies I've been showing you guys. So I'm giving you guys this opportunity to drop a comment down below with anything you want me to explain to you guys in the next video, and I'll just do that topic for you guys. 5 things to check before you enter a trade. Let's go. So step number 1, you need to identify market structure. Is it a trending market or is it a market that is not trending? Yeah, so when you see a trending market, that is the first thing you have identified before you enter a trade. You want to be trading on the same side or on the same direction or in the same direction with the market trend. So guys, what I mean by identifying market structure is what I'm going to show you guys on the charts right now. So we are on the charts right now. What you need to do is you need to make sure that the market is going on maybe an uptrend or a downtrend. For example, here the market is going on an uptrend. Okay, you have to make sure you are trading on the same side with the trend. You don't want to start to sell the market while the market is trending upwards, guys. If you go on and start trading against the trend, that is when you'll find most of the mistakes that most traders make. You find your stop loss being hit, and then the market continues in the direction it's been going. So identify market structure and start continuing from there. So you want to know whether the market, you want to check and make sure that the market is creating higher high, higher low. It's creating a higher high, higher low, higher high, higher low, like that. Okay, you want to make sure that the market is creating structure as it is going up. So after you have identified this, you go to the second second thing you need to check before you actually place a trade, and that is you need to check and confirm whether you are trading within an area of value. What do I mean by an area of value or an area of liquidity? Okay, what I mean by that is that you need, let's go on to the charts. I show you that as you're trading, you need to check and make sure that you are trading from an area of value. For example, if the market is going on an uptrend, higher high, higher low, higher high, higher low. On an uptrend, you want to place your trades only at a lower low, I mean on a higher low. Make sure your entries are within the vicinity of a higher low. Don't start buying while the market is still retracing. Buy only when the market has created a higher low. You want to look for an entry at a higher low, like here. This is an area of value. This is an area of liquidity. Why? Because the banks are pricing in this asset. They are pushing the price lower to buy it at a lower price before continuing. So this becomes an area of value which the banks also are trading from. So you want to look for entries at an area of value. Okay, I hope you guys see that. You need to enter in an area of value. So as you're entering in an area of value, the next thing that you don't have to ignore, that you shouldn't ignore, that you should make sure you check on is you must make sure you enter into the market or enter a trade, enter all of your trades after you have got a confirmation, a candlestick confirmation, a chart pattern, or anything else in that regard. I've shown you guys that in several videos on the channel. You can go and check out that. But you must make sure that you get a confirmation at an area of value while you have actually confirmed the market structure. That is it trending upwards or downwards? So I'll show you some of the ways you have to look for confirmation at an area of value to enter a trade. So let's go on the charts now. So here are the area of value you want to look for. Let's just take this out. You want to look for a bullish engulfing in this case because this is a bullish market, or you want to look for weak rejections around this area. So what do you see here? After the market has come down, you see that the market started going up here. We didn't get a strong confirmation here, so you could wait. Yes, you could jump in a buy here because you had 1, 2, 3 white soldiers, as I showed you guys in the previous video. So you'd actually jump in on a buy here, okay, because you had 3 white soldiers confirming a continuation of a trend to the upside. But also, if you fail to jump in here, you'd wait for this other confirmation of long weak rejections, then you would jump in on a buy around this area here. You jump in on a buy here, so stop loss here, and then you could target a 1-to-1 here. You'll get the 1-to-1 here. This is a 4-hour chart. If you entered on the 3 white soldiers, you'd get a better entry, you'd get a better risk to reward, which would be a 1-to-2. So make sure you enter after a confirmation candlestick has formed or a chart pattern has formed around an area of value, which is this place I've marked out for you guys here. So make sure you always confirm your trades, confirm them with candlestick formations. You can also use Fibonacci if you use Fibonacci. Let me show you on the charts how you use Fibonacci to create an entry at an area of value. Let's go on charts right now. So using Fibonacci, you just look for the structure. The structure is an uptrend. So this is the lowest point before this uptrend. So you draw your Fibonacci starting from there to the highest point before the retracement, which is this area here. Okay, so you can see that this comes down to almost the 38 Fibonacci. It does not reach the 38 Fibonacci, but it does not also cross below the 38 to come to the 50% Fibonacci. So most of the people would trade this as an uptrend because it did not cross lower to go to the lower Fibonacci values. I have a whole video explaining Fibonacci, so I don't want to go through Fibonacci in this video. I'm just showing you how you would use it as something that a tool to help you with your entries. So in Fibonacci, you only enter at the 38 or 50 or 61.8 Fibonacci, but in this case the market did not reach there, so the Fibonacci tool would not help you that much in this scenario. But you want to look for, just to repeat, you need to look for market structure, where market structure is headed. Is it a bullish trend or is it a bearish trend? Then you need to look for areas of value. That is the second thing you need to look out for, areas of value. That is where you look for your entries. After you found an area of value, you want to trade only after a confirmation, okay? Only after confirmations. You trade only after the trend has been confirmed by a bullish engulfing pattern or a chart pattern that confirms the continuation of the bullish trend. The next thing that you need to do is to make sure you check the news, okay? Make sure you check the news. So the next thing I wanted to show you is you make sure you come to your news. You go and check your fundamentals. I use investing.com, as I'm going to show you on the charts. I use investing.com, okay? I use investing.com. Like here, you see investing.com, and I'm trading mostly GBP USD. That's why you see I have selected US dollars and Great British Pound on this. And I have also selected to show only the medium to high impact news. So today we had bad news for the US dollar. That is why the pound supported this trade to continue going up, okay? So you make sure you come and check your fundamentals. Is the pair you're trading going to be affected by the fundamentals? Make sure you check on your fundamentals to make sure that you are going to trade within the correct time frame for the news, because you might put a correct trade and then the news come out really bad against you, and then the whole thing blows up in your face, guys. And I don't want that for you guys. You know that I've got your back covered. So guys, remember, if you like such content, give a like, subscribe, and also comment down below. Yes. So the final thing that you need to check for, guys, is where to put your stop loss and your take profit. How do you exit your trade? Where do you put your stop loss and your take profit? Where do you put your stop loss and your take profit, guys? So let me show you just briefly where you should consider putting your stop loss and take profit. The market is going to chart and I show you that again. So here, as you can see, just from this example, we had this as a bullish trend. As you can see, this is a bullish trend. This market is going up. That is why I decided to trade in the direction of the trend, which is bullish. You can see this is bullish. Okay, that is why I sent out this buy signal. Okay, after I saw this retracement had happened, I saw 1, 2 bullish engulfing candles. Okay, that was the confirmation. Then I sent out this signal here. Okay, sent out the signal around here. Okay, now the trend continued. Why did I choose to put my stop loss here and my take profit there? I chose to put my stop loss here because this is the most recent previous swing low. Okay, this is a swing low. This is an area of liquidity where if the banks are to push price back down there, it will cost them a lot more money than letting the profit push further up. Okay, so I put my stop loss right here because that is an area of value. You can call this a support zone. Okay, and a support, this is a support area, you can see. Okay, I put my stop loss there, just around that area. Okay, I could even put the stop loss down below, but I was sure because of this bearish engulfing candles that my stop loss would have a higher chance of not being hit. Okay, that is why I priced it below this first bullish engulfing candle. Now, why did I put my take profit? Why did I put my take profit at this area here? Why? You can scroll back and you see. Okay, you can scroll back and you see why I put my take profit there. I put my take profit here because I was expecting price, after failing to break this high and this high, it broke those two highs around this area. Okay, it broke those two around this area. So I priced my take profit there because I knew that price, after breaking these two, it is going to aim at coming to this area of support. This area of support here. Okay, that's an area of support where price has been consolidating in the past. So I put my take profit there because I know there's liquidity here just above this line. Up here there's liquidity, so the banks will take the price there to grab that liquidity before retracing down. So I hope you guys understand this. Briefly. There's a more detailed video about how to exit the market. You can search for it, or I'll put a link in the description. Remember guys, if you don't understand anything, or if you want me to go into detail about some of these topics, drop a like and drop a comment down below, and I'll be able to get back in the next video and answer you. Guys, I would also like to say thank you so much for your support. We are really growing fast, and I hope you guys continue their support. I'll bring you guys more gems soon. So till next time, hope this video brought you value. Peace.